Thank you, everyone, for joining us on this week's Ask the Specialists. Today, we're going to focus on the COVID-19 impact on the ERM, the Enterprise Risk Management function within insurance carriers. Today, we're going to welcome in John Swanwick, Yvette Connor, and Sean McErlane into the conversation. Let me first introduce John Swanwick.
Thanks, Matt. The first thing I'd like to highlight is AM Best has changed its outlook to negative for the life and annuity market segment. And why did they do that? Let me just cover, Matt, the top risk facing life insurance companies. The most impactful risk is the credit and liquidity risk and issues due to the low interest rate environment and equity market turmoil, which is going to have a material impact to operating performance. Number two, market conduct and regulatory risk with regard to agent broker distribution channels shifting from in-person to remote. Now, sales agents are forced to conduct sales and marketing either telephonically or through video conference. That may increase market conduct risk. Number three, small group life segment profitability and solvency risk, which may lead to a reduction in premiums. As we all know, there's significant pressure on the small business market in the U.S. Number four, increased exposure to life and disability claims and the impact to reserving and operating performance. This COVID-19 crisis has been challenging all of us. Thank you, Matt.
John, excellent overview. Thank you so much for that. I know that each industry line has their own specificities. So what we're going to do is we're going to bring in Sean McErlane to help us understand any nuances that the property and casualty industry is going to face as it relates to COVID-19 and the ERM updates. So Sean, welcome into the program.
Thanks, Matt. For the past month, Yvette, John, and I have been meeting with a significant number of chief audit executives and chief risk officers from the P&C insurance industry. Some chief risk officers are talking about performing an underwriting impact analysis by geography and line of business. What they're doing there is they're evaluating all books of business, looking for reinsurance opportunities to increase writing capacity for top performing products. Second, government and regulatory positions on coverage. For example, the impact government plays with regard to policy wording around BI claims and regulatory pressure to return auto premium. Third, MGA and TPA resiliency. How are insureds able to monitor MGA and TPAs from a remote environment? They really still need to ensure operational excellence to protect the brand reputation. Finally, third-party risk. The ability of vendors to protect insured data, including PHI and PII.
John, thank you for the overview on the P&C segment. Great call out on the risks associated to the MGAs and the TPAs. Remote access is definitely going to pose some problems. Excellent call out. So now we're going to transition to Yvette Connor. Yvette's going to walk us through the specificities on the health line. Yvette, welcome to the program.
Thanks, Matt. It's good to be here. As we've already been discussing, there are several challenges in the marketplace as regards various types of insurance, including health insurance. So on the health insurance side, we're thinking about the likelihood of reductions in gross written premiums and what it means as elective surgeries are delayed into later portions of 2020 or potentially into 2021. We also know that there are recessionary market conditions in play that might suggest that we have less insureds and or downward pressure on premiums that need to be taken into consideration. Certainly privacy and work from home and cyber all hang together. So thinking about that in terms of what it means from a risk governance perspective and changing risk profiles, similar to what we recently discussed. And last and not least, the regulatory aspects of what's happening should not be ignored. For instance, we already know in California, they have required that insurers there essentially allow for a 60-day relief period, and that's been mandated across all insurance lines. So interesting and uncharted waters ahead. Thank you.
Yvette, thanks for joining us and giving us the overview on the health lines. So I'm sure that's going to be point of focus for you and the team going forward. John, I know that you've built with your team a diagnostic tool that helps navigate some of these scenarios. Can you help us walk through what that tool looks like and what it does for our clients?
Thanks, Matt. Yes, Grant Thornton has developed a pandemic risk assessment survey. Let me talk to you a little bit about what the survey is. It's a tool that focuses on 4 key risk areas. And let me just highlight those 4 key risk areas. They are liquidity and cash management, people and labor, supply and demand, and external factors, including tax. And what we're asking our clients to do is complete the survey. It only takes about 30 minutes. It's relatively simple. And if they complete this survey, we will offer a workshop. And what we do with that workshop is we will provide our insurance industry experts, and we will meet with our clients to help them provide a benchmarking assessment, a resiliency scorecard, as well as industry insights.
John, excellent overview. I want to say thank you to yourself, Yvette Connor, and Sean McErlane for joining us this week on Insurance Ask the Experts. We will see you next week.